Make sure you guys get your free stocks from Moomoo. Link down below. Deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. And on top of those 5 stocks, you also get 1 free share of NEO guaranteed. Again, use that link down below. Deposit $100 and get your free money. And with that being said, let's get right into the video. So the markets today, I don't even know what to say, guys. They were an absolute bloodbath. We had the S&P 500 down 3%. The Dow went down 2.4%. We had the NASDAQ down almost 4%. And we had the Russell down 2.5%. And the VIX went up 14%. Gold up 1.7%, cracking over 2,000 an ounce. And we had silver up 0.1%. And we all know oil. Oil went berserk today, guys. We're seeing over $4 a gallon in gas as the national average here in the United States, which is very close to that all-time high, which was, I think, $4.11 back in July of 2008. So these markets are not looking good. It looks like we're going to have a recession, guys, by the looks of it. Oil's up, markets are down, economy's slowing down, the inflation rate is going bananas. People aren't using, or rather spending as much money because their dollar isn't going as far. This is a recipe for disaster right now. And if you guys have perspective, if you're looking at this from a long-term perspective, you should be good. I'm going to be good. We're all going to be good. But in the very short term here, the day-to-day, it's not looking good. Look at this, guys. SPY ended up breaking under 427, and we went a lot lower than 427 today, guys. We went under 420, and you can see we're actually down a little bit more. We're down almost $1 in the aftermarket hours, trading at about 418. So by the looks of it, we are well on our way to go down to 410, which was the low point when Russia initially invaded back on the 24th of February. So I have no doubts in my mind we get down to 410, whether it's tomorrow, later this week, at some point next week. That's what the charts are telling me, guys, and we might even break that low and start going low 400s. Maybe SPY even goes under $400 at this point. It's very, very possible by the way things are looking. And Triple Q, let me show you this, guys. Triple Q is very close to the lows from the end of February when Russia invaded. We're trading now at 323.93 aftermarket hours, and the lows from a couple of weeks ago, just about under 2 weeks ago, were around 317.70. So we're really close. If we have a red day tomorrow, again, if we have another deep red day, this could even go down to 317 tomorrow. We might even take the lows out tomorrow. At this point, guys, with the VIX up over 30 and it's above 35 as well, anything is possible. So gear up, get ready for more volatility, more red. It doesn't look like anything is changing that. And on top of that, we have the CPI number coming out this Thursday, and we're probably going to see very hot inflation numbers, guys, coming out of the U.S. for February, and we have the Fed meeting the next week. So, there's a lot going on, guys. There's a lot going on. And in times like these, you just got to get the popcorn ready and take it for what it is. Enjoy the moment. Enjoy it as much as you can. That's what I'm doing. And buy stocks you like for the long term. I've been buying a lot of Google on this dip. We'll talk about Google in a little bit here. I've been averaging in to S&P 500 ETF. I've been buying some international fund, just one international fund, which is VXUS. It's a smaller, very small portion of my portfolio, but I do want to start adding more international. I'm looking more at REITs too. You guys in my Patreon know I've been buying Realty Income. I started buying that in 2020. Did I start buying it late 21? I think I started buying it in 22, 2 months ago, maybe in January. I also started buying STAG, which is STAG. This is an industrial REIT. I also have been buying Vici, VICI. So I'm looking at REITs for yield. I'm also, again, looking at Google, the S&P 500, some international exposure as well via VXUS. So that's kind of where my head is at in a very brief little intro or whatever you want to call it, guys. So what do you think? Drop me a comment down below. What have you been buying? Are you buying Google? Are you buying some other tech stocks? Maybe some consumer staples? I don't know. Drop me a comment. Let me know. Make sure to smash that like button as well. Let's try and get 150 likes on this video. Can we do it? I challenge you guys. Hit that like button. Let's try to get at least 150 likes. And let's get into now some stocks I'm looking at. We'll talk a little bit about big tech, Apple, Google, Amazon, Facebook, the whole nine. And we'll talk a little bit about here Newmont, NEM, which is a gold stock. And you guys saw gold today, like I mentioned in the intro. Gold cracked over 1,000, or not 1,000, 2,000. If it was 1,000, that wouldn't be good. We cracked over 2,000 announced today, which is fantastic. Gold went up about 2% on the day. And not to toot my own horn, but did I not call that out? Did I not call that out here on the channel, guys? I mean, I've been saying gold 2,000 announced plus in 2022. I said that before 2022 even started. And did I think Russia was going to invade Ukraine, which would cause gold to go up very quickly like it has? Absolutely not, guys. I did not think that was going to happen. But either way, it hit 2,000 announced faster than what I thought. But either way, we hit 2,000 announced. So at this point, a lot of these gold stocks are going berserk. We have NEM, Newmont Corporation, which admittedly on this 20-day chart is overbought. And on the 4-hour chart, it's pretty overbought as well. But if you look on this 3-year chart, this is a technical breakout. We took out $75. And is this an all-time high? Probably not. I mean, gold stocks did very well in about 2010, 2011. Let's take a look here. Oh my goodness. Wow, look at that. Newmont actually did hit an all-time high today. That is impressive, considering if you look at GDX, which is a gold miners ETF, this one is very far off of all-time highs. It's actually down from $67, which was the all-time high in 2011. It's actually still down about 45% from that point. And the fact that Newmont is clearly outperforming GDX and it just hit an all-time high, that's pretty crazy. Would you look at that? I mean, that's awesome. Newmont back in 2011 was about 71 a share, and then it crashed all the way down to 15 a share, which is nuts. It lost about 80% of its value, and it's been completely ripping since pretty much 2015, 2016. And here we are again, like I said, all-time highs. So if we continue to see gold be directionally bullish, which it doesn't seem like that's changing, if we see gold go 2,050 announced, 2,100, 2,150, which I think is very possible over the next couple of weeks/months here. If we continue seeing this move, Newmont's going to continue running regardless of the fact that it's overbought. Sure, it might see a little mini pullback here and there. Maybe it goes from 78 to 75, cools off a bit, and then rips to 80. But overall, the point here is gold is still directionally bullish. Newmont Corporation, clearly bullish as well. And as long as that remains, gold's moving up. Newmont, it might have little ins and outs of little pullbacks, but overall, I think it could go 80 plus, 85 a share, no problem. So I'm watching NEM on this breakout. Let's talk a little bit about big tech right now. We have Apple pulling back a good chunk today. Apple down 2.4%. And from all-time highs, Apple is now down about 13 to 14%. So Apple's officially, as of, I think it was in correction territory last week, but now with today's move, it's officially deeper in correction territory. And by the looks of it, it's a falling knife. It's under the moving averages. We're seeing a death cross, and this might be going down to test the lows from the end of February, being around 152 to about 153. And if we do go down and test those lows, which I believe is very likely, that's also going to be the test of the uptrend. We might get some sort of relief rally there. We might. Keyword is might. Nobody knows what's going to happen, but again, if we go down 153, maybe we get a short-term pop back to about 160, and then we probably will see more selling pressure as well from that point. And the selling pressure will probably continue for the big tech giant Apple until the markets figure themselves out. And by that, I mean until the markets start to reverse, and that's not going to happen anytime soon, guys, by the looks of it, especially as long as this Russia-Ukraine situation is going on, and it's blasted all over the media. Literally everywhere you look, you see Russia-Ukraine. I mean, I don't really watch the news, to be honest with you guys. Maybe I'll tune in here or there. I watch a little Fox. I watch a little CNN to get a little bit of perspective. But either way, everybody's blasting this stuff all day, and it's peak fear, peak uncertainty at this point. And as long as that's the case, Apple's going to suffer more. It's going to be volatile. We're going to have Amazon, which today closed at $27.50, guys. Amazon is down $1,000 a share. It's well in a bear market. It's almost down 30% from that $3,700 all-time high, which was hit back in July. And Amazon's about to, it's testing the lows now. The lows from when were these lows hit? The end of January, 2,700. We're literally there right now. If 2,700 breaks, we start going mid-2000s, Amazon's going to be quite interesting. Maybe starting a position. As always, I'm not a financial advisor. I'm not telling you what to do, but you got to realize Amazon's a big company, great company. It's still growing, and it's now down almost 30%. And if it falls under 2,700, it's going to be in free fall mode. It might be the time to scoop some more Amazon at this point, and I'm thinking out loud here for myself. And Google, it's always a good time to pick up more Google, guys, in my opinion. Look, Google today went down over 4%. Now it's definitely in a bear market. It's got to be. No, it's almost in a bear market. It's down 18% from all-time highs, and mind you, they reported killer numbers about a month ago. When was this? A little bit over a month ago. And the stock went up like crazy. It hit over 3,000. They announced the stock split, and it's down 20%. This is almost like a gift from the investing, trading, stock market gods, whatever you want to call it. This is a gift in my opinion. And if it goes even lower, which I really do hope it goes lower, if it breaks under 2,500, 2,400, this might be the I don't want to say the cheapest stock in the stock market, because it's not. There's a lot of value stocks that have P's of a 1 or 2 or 3, so it's not the cheapest stock, but it might be the best bang for your buck if it goes low 2000s, considering the ridiculous growth they have. YouTube is such a great asset, which is only going to continue growing. They have all their other business segments of their businesses, right? If this gets down, and it might even be under a 20p right now. Let me check on my Yahoo Finance, guys. Give me a second. It's a 22.5p right now. So if this thing gets under a 20pe, and the market cap starts going down, 1.4 trillion, 1.3, 1.5 even, and now it's at 1.7 trillion for context. If it starts getting to those points, guys, it is a no-brainer. It's a no-brainer. And again, this is for me. If you are watching this, you don't know much about Google, I'm not telling you what to do. Don't just go buy it. But I'm just kind of speaking out loud. This is my YouTube channel after all, guys, right? You want to hear my thoughts? Here are my thoughts. So Google is the best bang for your buck, in my opinion, even at these levels, but especially if it starts going down low 2000s, 2,200, 2,100. If it goes under 2,000, which I doubt happens, but if it does, I'm freaking gonna do whatever it takes to buy as much Google, and use your imagination for that, guys. I'm just kidding. I'm not gonna do anything stupid. But yeah, I love Google. What else can I say? Guys? So that's GOOG. AXP is another one that I'm looking at, which is American Express. This went down 8% today. It's in free fall mode, falling knife, whatever you want to call it. It's down a lot, and it's down 20% from the recent almost $200 high that we hit here on the 4-hour chart. So now that means AXP is officially in a bear market, guys. It's officially in a bear market. And this is I don't want to say for sure, nothing's guaranteed, but we're probably going to get some sort of relief rally on this one, whether it's tomorrow, later this week, next week, I have no idea, but it's very oversold, guys. Very oversold. It's been falling in a straight line. If you take a look here on the 5-day, actually maybe the 10-day chart, you can see just a week or two ago, we were almost $200. Now we're at 160, and this thing has fallen. Look at this day. On the 1st of March, it fell about 8% in a day, and today fell another 8%. It's been falling, in the in-between days for the past couple of days, between early March and now we're, 1 week into March. So this thing has been destroyed. And again, pulling back up this 4-hour chart, I think a relief rally could come here, whether it's at 150, 155, 160, where we are now, maybe back up to 170, 175, 180. I don't know, but I do know, again, it's oversold, and I'm going to be on the lookout for some sort of relief rally. And it's the same thing here with Nike. Nike is disgustingly oversold right now. We just hit $124, a 5% red day today, and now Nike's trading at a low here on the 4-hour chart. Look, it's down from 180 almost to 124. Like I said, it's down about 30%, well in a bear market. And if I pull up the longer time frames, it looks, the chart looks awful on the yearly chart. The 3-year chart looks decent. I mean, it's under the 50 moving average. Now we're approaching the 180 moving average. Actually, this 3-year chart looks pretty good. I mean, it shows that Nike, the sell-off might be getting a bit exhausted here, and we might get that relief rally anywhere from 115, which is right by the 180 moving average here on the 3-year chart, to maybe $120. That's where I'm looking at here. So Nike's at an interesting spot. Amazon's at an interesting spot. Google, I freaking love. I'm buying that up like crazy. Give me all the Google you can get. And Apple's one that I own, and I've owned it for years, and I'm not really looking to add more to it quite yet. Apple is still, I mean, it's holding up pretty well, believe it or not, guys. Apple's only down about 12-13% when Triple Q is down. It's in a bear market. Now, Triple Q, take a look at this, guys. Triple Q is down about 20% from all-time high. So Apple's holding up. I'm not looking to add to that yet. I mean, if Apple starts going down 130, 140, maybe I'd consider it. But even then, my cost basis across my accounts that I own Apple, I think I own it in 2 accounts maybe, my cost base has got to be about $100, $110. So I'm not rushing to buy more Apple here. I'm just not, and that's just the reality of the matter. And let's see here before we wrap up the video what's going on after hours. Seems like nothing really has changed here. Triple Q still trading at 323, pretty much flat after hours. SPY, let's pull that up. SPY's at about 418, also flat after market hours here. And actually, before we wrap the video up, let's just run through some of these names today that got destroyed. We had the Trump SPAC, which this went down 15% today. It got demolished, and I'm not surprised considering this is a way more speculative play. And by the looks of it, the trend still looks pretty good. I mean, look at this, guys. We're holding above the 180 moving average on the 4-hour chart. We're still holding a higher low. And as I'm drawing this out, it looks like the ascending triangle is still intact. So this might be a dip buy. I'm not telling you to buy it. I'm just saying people might buy this up at 80, 85 bucks, maybe run it back up to 95, 100 bucks. And if it breaks 100, that's where the ascending triangle will play out. And this could end up exploding from there. And who knows what's going to happen with these crazy markets that we're in. Another one that went down a lot today was Macy's. Macy's completely collapsed under the wedge here on the 4-hour, which is not good. It's now trading at a multi-month low. Also not good. It went down 14%. DraftKings, I mean, come on, man. DraftKings went down 13%. This is one of my spec plays. You guys know that. Maybe you don't. I don't know. But DraftKings is one of my spec plays. It got destroyed today, and that's why you don't want to put too much money in speculative plays. You know, you could put a little bit. That's what I do. And just realize if you do put money in these, they can go down a lot. They can go bankrupt. And today's an example of that. They went down a lot, the spec plays. You know, the Trump SPAC, DraftKings. We had, GameStop got killed. Snapchat went down 9%. I don't think Snapchat is as speculative as DraftKings, but still, it got hit very hard. Square down 8.5%, Nvidia down 7%, Airbnb down 8%, and every chart you pull up that's not an oil stock, that's not what else has been doing well. Certain value names, every chart you pull up looks like freaking dog crap. Let's be honest. It looks awful. And it doesn't look like anything's changing here in the short term. Even Tesla stock, which everybody loves Tesla, right? This chart looks awful as well. So there's really nothing that looks great. If you're a short seller in this market, if you're a bear in this market, you're obviously winning. If you're a bull, you can't catch a break. And the way that I'm looking at it, especially from the long-term perspective, the long-term investor lens, this is a time to accumulate. Again, Triple Q's in a bear market. SPY is pretty dang close to a bear market as well. Now is the time to start adding or just dollar cost average. At least that's my opinion. That's my belief. And yeah, I mean, we'll wrap it up there, I guess. I hope you all enjoyed the video. If you did, hit the like button. Again, let's try to get 150 likes on this video. Drop me a comment, subscribe, and make sure to join my Patreon if you guys want all my moves in the markets, videos, options option moves I'm making. Everything is on Patreon, link down below. And don't forget to get your 5 stocks from Moomoo with a $100 deposit. And on top of that, you get 1 free share of NEO guaranteed. Use my link down below, deposit at least $100. You get some free money. Who doesn't like free money? And with that being said, I'll catch you guys in the next video. Peace out.